All right, it's time to reveal my entire $30,000 dividend portfolio. And in case you're watching this early, thank you for being a channel member. Otherwise, you're seeing this about a week later when everybody else gets the release. Let's jump right into it because this is my 7.2% dividend yielding portfolio that's also appreciated 4% in the last year. So we're talking about 11.5% total gains thus far. Not bad for my first year dividend investing. I'll tell you everything I bought and how much right now. And at the end, I'll share with you like a pie chart of all of these so you can see exactly the portfolio percentage of each one. We're going to go over everything in alphabetical order because I'm a nerd like that and I love it. First off, Arbor Realty Trust, ticker symbol ABR, $114 worth, which is under 0.5% of the total portfolio. But so far, this has not been a terrible stock, but my total return is negative 8%. So maybe I got in at the wrong time. Maybe it's just a long play. Let's see. Next is Acre, which is a realty investment trust, if I remember correctly. ACRE, Ares Commercial Real Estate. That's again just a tiny little sliver, 0.21%, only $64 worth. For some reason, I bought a bunch of real estate things this time around. I think I'm going to go in a different direction in the future. AGNC, which is AGNC Investment. It's another real estate investment trust. And for this, I've got finally over 0.5% invested, which is about $184 worth. And I've got a nice dividend pending for that that's coming here in about a week and a half. So that'll be good to have. Next is Ares Capital, which is a fund, but I don't think it's a real estate investment trust, if I remember correctly. That's 0.4%, $126 worth. DGROW is a newer one for me, which is iShares Core Dividend Growth ETF. This one is probably a much more diversified version of other things I've invested in, which I appreciate. 1.85% of my portfolio is DGROW. Enterprise Products, it's been around for a while in my portfolio now. Almost 2% worth, $575 worth of EPD. And ET is one I've been buying a bunch more of lately. I've just been reading great stuff about it, read that the fundamentals are really good, and it's a decent dividend payer too. So for now, it's only 0.44%, but I think I'll keep buying that more in the future. HDV, which is iShares Core High Dividend Equity Fund. Another fund. I got to be getting into these funds and away from these individual stocks, man. 2.35% of the total portfolio. So I went pretty big on HDIV so far. Here's one that I just barely bought any of. Hercules Capital. They invest in mid-sized companies. 0.06%. I bought one share. Nothing to really sneeze at there. Funny to say, I literally just sneezed. And then here's a big player in my investment portfolio, which it probably is for yours too. It's a very popular thing to invest in. JEPI. The JP Morgan Equity Premium Income. 15% of my entire portfolio is JEPI, and I might do even more in the future. So that's a little over $4,500 just in JEPI. Cosmos Energy, I bought like 2 shares of this, 0.04%, nothing to really even mention. Altria, if you like cigarettes, well, they're a good dividend payer, but it's only 0.15% of my total portfolio. One share, basically, not a huge deal. It's actually down 10% since I've owned it, so not doing that well for me so far. And then the illustrious MPW, Medical Properties Trust. If you're not familiar with this, this is a real estate investment trust. Another one I invested in. It's just plummeted in value. Watch this. The 1 year down 57%. Oof, what a nightmare. Basically, their biggest tenant that they're leasing to couldn't pay them rent. So the $92 I've got invested with them continues to lose value. Annaly Capital, another capital company. They engage in the investment and financing of residential and commercial assets. Dude, what is with me and these REITs? This is only one share, basically. It's gone down for me. It's not done the best, but it's only 1 year. Prospect Capital is one that I see pretty frequently because I believe they pay every month, even though I've only got $15 worth. They're just a little, the engine that could, if you will. It's down 21%, so maybe now is a good time to buy in. I don't know. Ready Capital Corp is another one that I just bought one share of. Literally $8 in a pool of 30,000. Not really anything to sneeze at. Rhythm Capital, barely 0.75%, $240 worth. Again, a real estate tied company. I really need to diversify into something outside of real estate. Redwood Trust, 0.25% of the portfolio. Another real estate related company. And here's a fan favorite, SCHD, the Schwab US Dividend Equity ETF. The difference with those other ones that I just have like a share or two in and something like this is that this is really well diversified because they've got a bunch of different companies. So look at all these different sectors that they're in. It's not just real estate, healthcare, financial services, energy, materials, technology. So the odds of this pulling an MPW and dropping 57% in a year are way less, thankfully. And this is 13.5% of my portfolio, but I wouldn't be surprised if I want more of that in the future too. Another popular choice for people is SPHD. This is one that I transferred over from my M1 Finance account to get that bonus here. This is 46% of my total portfolio, SPHD. It's actually gone up by 9% since I've held it, which is great. And it's paid a bunch of dividends, and so I appreciate that. This is another one that's well diversified amongst a bunch of different sectors, so it's a safer investment, at least in theory, than picking one stock here and there. I also transferred over a bunch of AT&T shares. AT&T's been a funny one because I feel like it's gotten a bad rap I don't know what they had changed. I think they changed their structure of their investment and people didn't like it anymore for some reason. So it's not performed very well over the last 5 years, but they continue to pay their dividend. From everything that I can research, the company is still fairly solid, but it's about 3% of my portfolio overall. May pick up some more in the future. We'll see. Tronox is another one. I don't even know what this company does. It's got such a cool name. TROX. I bought one share. Let's see what they do. Oh yeah. Mining and inorganic chemicals. Titanium dioxide mineral sands. Whatever those are used for. Couldn't tell you. But hey, at least it's not another real estate company. And then finally, my last one, VIGI, the Vanguard International Dividend Appreciation ETF. I wanted to get some international in there because if you put everything on America, yeah, you're probably going to do well over time. But this way, at least if you're a little diversified internationally, hopefully that helps balance things out whenever America isn't performing well. And that's another fund that spreads out the investment across a bunch of different companies. Some of these you've probably heard of, like Novo Nordisk and things like that. Those are fairly well known, but a lot of them are international companies that we haven't heard of. And so that was my goal. Let's not just keep going all in on the same group over and over. Let's get a little bit of diversification. Probably should go heavier on this. It's only 1%. Probably should go closer to like 5% on this. So not as exciting for me because I don't trust it's going to grow as much, but probably the wise thing to do. I'll put that on the list too. So here's a cute little chart that I made that's my returns month over month since I started investing. You can see that this is relative to the amount I had invested at the time. This isn't an overall investment amount. This is based on month by month returns, extrapolated as if it was an entire year. So the APY per month is what we could call this. Had a pretty crazy start, 7%, 16%, 7%, 5%. Hopefully that 16% wasn't a clerical error on my part because that seems like really, really high. Had another 11% in December and then it's gone down since then because I lumped in a ton of money. So I probably haven't seen the full dividend return from having moved a bunch of money over from M1 Finance yet. But for now, the trend seems to be going downward, but I think it's going to level out to around 7%. We'll see in the next couple months. All right, now I'm going to make the pie chart for you so you can see at a glance how much money is invested in each stock, in each investment. I wish that Robinhood did this for me, but guess not. All right, now we've got a beautiful chart showing us what we're really investing in here. The vast majority of it, as you can see, are the four kind of really popular ETFs, JEPI, SCHD, SPYD, and SPHD. Those are the bulk of the portfolio. Everything else is just little pieces here and there. If we total up just those four, that's 85.75% of the portfolio. So it's not really as interesting and diverse as it sounds. I'm probably going to have to very intentionally make some decisions in the future to make it more diverse if I really want it to be. But if you're willing to share, leave me a comment with your portfolio kind of breakdown. Just the oversight, just the majors. Are you doing something more where you're cherry picking a lot of individual stocks here and there and it's kind of equally spread across them? Or are you just picking one or two big dividend ETFs and you're done? Just kind of curious to poll the audience and see what your kind of perspective is here. All right, till next time. Thanks for watching. See you guys. Bye.